So good afternoon, and thank you for joining the Betmakers Technology Group Limited Q2 FY23 results briefing. I'm Jane Morgan, the Investor and Media Relations Manager, and from this morning's ASX release, investors will note that there have been several board and management changes. So today I am joined by our Executive Chairman President, Matt Davey, our Non-Executive Director, Nick Chan, our Chief Growth Officer, Todd Buckingham, our CEO, Jake Henson, and our CFO, Anthony Pullen. The team will be providing you with an overview of today's Q2 FY2023 results, as well as engaging in a Q&A session. So to ask a question throughout today's briefing, please use the Q&A function at the bottom of your screen. Todd, I'll hand over to you.
Yeah, thanks, Jane, and welcome to our quarterly results and management update. There's obviously a lot to cover off with the 4C and company achievements for the quarter, along with the announced board and management changes which have occurred after our strategic review. For anyone that's followed the story, you'd understand that we have been in a very strong growth phase, opening up opportunities both domestically here in Australia and also globally, with our footprint now in many locations around the world. The focus for our core business is now going to be on optimization and execution, while the global opportunities we've created and continue to develop will now operate under a more structured and focused and agile team. I'd like to congratulate Jake Henson on his promotion as CEO. He'll do a fantastic job, and I look forward to working with him in the years ahead. I'd also like to thank Nick Chan for his time as chairman, for his support to me and in my time as the CEO, and obviously his commitment to the company over the years. To the shareholders that have been here from the start and helped build the company to where it is today, thank you for your continued support to me personally and your support to the company through good times and bad, and I look forward to the wins ahead. While I'm signing out as CEO, I still remain 100% committed to the business and the company, and I look forward to delivering on the global opportunities that we've created and continue to open up. So firstly today, we'll take you through the quarterly highlights and financials along with some operational updates. And then we can open up to some questions in regards to the next phase and the management changes that we've implemented to capitalize on these opportunities over the next 12 to 24 months. So with that, I'll hand over to Jake, who will cover off on the highlights from our previous quarter. Our new CEO, Jake Henson.
Thanks, Todd, and thanks for everyone for joining. Yeah, as mentioned, I'll run through some of the highlights from the quarter before Anthony will take you through a bit more of the detailed financial side. So key takeaway at the top was record cash receipts for the quarter, which was up 13% on the previous period to 26.9. We obviously launched a tier one brand into the Australian market here in Australia, underpinned by our new Betmakers next generation technology. Over time, this technology will become the backbone to what we do in global markets on the platform and trading operations side, which is really exciting. We had also the successful launch of the Global Tote Hub via our Alderney license. It's now operational with 2 key customers, and obviously a key focus of our upcoming half will be to grow upon this area, which we'll touch on later. We had the acquisition of Punting Form, and this is primarily to bolster our MTS and pricing capabilities and also to enhance our product suite for our parimutuel and premium customers globally. We announced a deal in December around racing.com and the Victorian and South Australian Thoroughbred Vision. In addition to that, we've also done a deal with Greyhound Racing New South Wales to bring on that streaming to our platform, which will enhance what we offer to the Australian market, those existing platform and NTS customers. We look forward to rolling that out over the next quarter. In December, we also launched fixed odds in Jamaica at Caymanas Park, the first fixed odds betting system launched in the Caribbean. On track at this stage, and the signs in terms of handle alongside the parimutuel are very encouraging. For us, our next step is to roll out the retail venues, which is occurring as we speak. And from there, the digital offering, so the mobile and desktop offering. And finally, I think that the big one to call out as a business was our ISO certification. For those that don't know, this is a big lift to get done because it's basically the globally recognized stamp in terms of governance, risk mitigation and security. And as a business, not only do we think it was essential to where we are now, we think it's an essential piece of taking us to the next level, putting us in a position where we can do big deals with tier one customers. And those customers can have the comfort that we have the right systems and processes internally to be able to deal with everything that comes with taking on business of that size. We completed the quarter's closing cash balance at 61 million. And with that, I'll hand over to Anthony for a little bit more detail on the finances.
Thanks, Jack. As Jack mentioned, I'll run through the Q2 4C in a little bit more detail. I think between Q1 and Q2, we're seeing sort of consistent themes in what's coming through those operational cash flows. Firstly, as Jake mentioned, on the cash receipts from customers, it was a record quarter for us with 26.9 million in receipts, which is up 13% on Q1 and 9% on the prior year. From these receipts, I think we're seeing continued strong receipts from our platforms and managed trading services division, as well as from our GRN division around the content distribution. Going back to when was it, July this year, we acquired the Penn National content distribution. And over the last 6 months, or the first 6 months of FY23, we've sort of gradually built up the rollout of that, and we're starting to see some of that growth in the Q2 cash receipts results. As I said, from a, quarter-on-quarter perspective, fairly consistent Q1 with about 5.9 million in net cash operational outflows for the quarter. For us, there's a bit of noise in there. There's a few one-off items. There's still some residual STIP payments around tax and super. We've got some annual charges, licensing fees, insurance premiums and the like. But fundamentally, for the first 2 quarters of FY23, we've seen a sort of inflated cost base, which has been largely driven by the investment we've been making as a company into getting some of these new operational products into the market, namely the next-gen platform, which is powering better, and then also other opportunities like the Global Tote Hub. So, look, while it's been a relatively expensive 6 months for us, we're quite happy with the operational gains that the company's made in that time, and we think that puts us in quite a good position for capitalising on growth going forward. As announced in this morning's announcements, the company's now sort of focused on normalising that cost base and then shifting towards positive operational cash flows for H2. We've already made some pretty good gains in terms of cost out and normalising that cost base, but it will remain a high priority for the company and for the management to continue to work towards that, while some of these revenue items start to materialise in the future. I think lastly, as Jake touched on, we finished the quarter with 61 million in cash and no debt. So we're in pretty positive position from a balance sheet perspective. And I'll now hand across to Nick Chan to run through some of the management changes.
We announced some changes today that the board, obviously working with management, have concluded that a restructure to create absolute clarity and focus to deliver growth, the growth plans for our shareholders would be the best way forward for the company. These changes are broadly Matt Davey appointed to the board in the role of executive chairman, and his role will be to provide strategic direction, oversight and prioritisation of our strategy. I myself will remain on the board as a non-executive director, and Todd Buckingham moves from his role currently as CEO to Chief Growth Officer, with a focus on developing and executing on our international opportunities and specifically our growth opportunities. And Jake Hansen is promoted from COO to CEO, and his focus will be on driving the operational excellence of the business and optimizing profitability in the businesses that are requiring at the moment scale to deliver. Let me introduce and congratulate and welcome back Matt Davey now as President and Executive Chairman.
Thanks, Nick. Look, I couldn't be more excited to be rejoining the business. I think the company's in rude health with over $100 million a year in revenue and net cash balance on the balance sheet and 0 debt. I think the company is incredibly well positioned. We have the ability to be able to drive growth on both a domestic and international platform. and the team have done a wonderful job of getting us into this position. When I look around the world, and obviously the macroeconomic environment has changed, the cost of capital has increased. I think it's now very prudent on management to drive operational efficiencies into the business, and I'll be working with the team to do that. In my experience, when a company goes through this rapid growth, as the company has experienced over the last 3 or 4 years, it's never in a straight line. And there are often from time to time opportunities for us to tighten up how we run the business and improve the operational discipline around how the company is structured. That said, we're not here just to drive operating margin. I think the broader promise of the business is on the international growth, and those opportunities are as strong and present today as they ever have been. I think Todd and the team have a phenomenal opportunity now to really lean into those opportunities without a distraction from the rest of the business. So I'm very excited about the structure that we have achieved today. I think the support of the board to get us here has been fantastic, and I look forward to working with both the board and the management to deliver fantastic results for you, our shareholders. With that, let me hand back to Jane.
Thank you, gentlemen, for the update. We've had quite a few questions come through, so I'm going to jump into them. Matt, I might give this one to you first up. So the share price performance has been pretty disappointing. So what is the company going to be doing to address this?
Thanks, Jane. Look, I think misery loves company. I think if you look around the world, most of tech-focused public companies have all suffered some form of price contraction. We certainly have not been immune to that. Some of that is justified and some of that is not. Our focus is to ignore the market. We do not care about day-to-day fluctuations in the stock price. Our core focus will be on the two kind of pillars that we have articulated today. One is operating core discipline and showing the operating leverage that the company can deliver. And coming from a revenue line of 100 million a year, I think there's a great scope around that. And two is executing on the growth opportunities we have, particularly around fixed odds betting internationally, as well as the global tote. I think we have a phenomenal opportunity to deliver results there. And if we do that over the next year or two, I think the market will reward us with the right price around our stock and the valuation of the company.
Thank you, Matt. Just continuing on with that then. So given the current share price, do you consider Bet an acquisition target? And is this why you've been brought on?
Look, I think as a business, it's incumbent upon the directors to always entertain any kind of conversation that could be accretive to shareholders. That said, as I mentioned in the outset, the company is in rude health. We have a very strong revenue line. We have zero debt. We have cash on the balance sheet. And my sense is our focus is on our own organic growth and delivering on the opportunities we have today, as well as looking at accretive opportunities if they present themselves. We are certainly not looking to shop the company. We think that there's enormous potential to deliver value creation just from what we have today, from the collection of assets we have, and where the company is positioned in this global market.
Thank you, Matt. We've had this question come through a few times, actually, just on the status of the share buyback. So with 61 mil of cash in the bank, so are Betmakers shares the best things to do with this cash?
Yeah, in terms of the buyback, we are reviewing our capital allocation policy. I think we will get back to the market in terms of whether we move forward with that or not. At this stage, I believe that is on pause.
Thank you. Another one that's come through quite a few times. So just in regards to the short interest, so it remains very high with a large portion reportedly associated with people very close to the company. This webinar attendee has asked in particular, are any executives or board members shorting the stock, and what's the plan to address the shorters?
Look, I think for one, it's a policy that executives are not able to short the stock. So that we want to be very clear about that. Two, look, I've been in the public markets for over 25 years. Shorting comes and goes. I think from our perspective, we are going to ignore the noise and focus on delivering results. If we do our job, then we will watch the market provide the support that we expect to see in return. I am not interested in day-to-day conversations around short interest. If we deliver as we expect we will, that will not be part of the conversation we expect to have with the market.
Thank you. Anthony, there's one here for you. So 6 million operational loss for the last 2 quarters. So for the half, it's 12 mil. How do you bridge the gap to break even for the second half? And do we expect it from revenue growth or cost out?
Yeah, sure. Look, as we noted, we're working towards positive operational cash flows for the second half of this financial year. I think the probably primary focus for ourselves is to bridge that gap from a cost perspective, at least initially. We've made some really good progress in the last 2 months or so. Really, we had a large cost pinch, for want of a better word, as we launched some of these products and led into Spring Carnival, which is ordinarily an expensive time of year for us. So I think as a management team, we're focusing getting back to that break-even point through cost initiatives. And then as the guys have touched on, there's a number of growth opportunities, more from a revenue perspective, which we hope will deliver us the upside from that solid base.
Thanks for that, Anthony. Jake, this one's for you. So you mentioned that the intense competition in the Australian wagering market is impacting on gross gaming revenue and therefore BetMakers revenues. So aren't our revenues based on net gaming revenues? And what would be the revenue benefit if the conditions were to return to normal?
Yeah, thanks, Jane. I think the way to look at that is your net costs that I guess bridge the gap between gross and net from a wagering perspective are relatively fixed. These could cover things like the GST or the point of consumption tax or fees paid to racing and sporting bodies. So the part you can control, I guess, as an operator and us as someone who facilitates that operator's being is the gross margin you make on the bets actually struck. So therefore that becomes the primary focus for us is, helping the operator with the parts that they can control directly, be that more efficient pricing and risk management, etc. I think to cover off on that second piece, we would deem any sort of increases in margin to be material, but they're also beholden to what happens at the net level and the macro factors. So I mentioned point of consumption, product fees and taxes can go up as well. All these things will factor into how the operators position their product in the market, and then further to that, what products they position in the market. So I think going forward, as those taxes normalize a little bit, I think operators will invest heavily in higher margin products. We've seen that shift in sports and racing through the introduction of same game and same race multi over the last 6 to 12 months.
Thank you. Just bear with me. There's quite a few questions coming through, so I'm jumping around. So Jake, another one for you actually. So looking at the better product, it's still a lot slower than other competitors. So is this being worked on?
The platform's under 24/7 development at this stage. So not only is it in a production state, we're certainly not content of where it's at, and we knew they were on a journey to develop it into the tier 1 global product it needs to be. So certainly everything gets benchmarked, everything from the user experience to page load times to product offering to speed of prices, everything. So certainly we're aware of certain bridges we need to close, and that's what we're committed to doing.
Thanks, Jake. Another one for you. So can you comment on the potential better acquisition of PointsBet's Australian business, and what would that mean for Bet?
Well, look, I can't comment directly for obvious reasons on any conversations between those two parties. I think it's important to point out that both PointsBet and Bet are existing customers of us on differing levels. Certainly two customers we're cheering for in their respective markets they operate within. I think this question was geared to more on the Bet side, and the one thing I can point out is our arrangement covers a broad range of services, including our platform, trading and management. And these could be extended should they complete any form of M&A in the future, be that in their current conversations or future.
Thanks, Jake. One for you, Todd. So can you provide an update on the US, particularly on the fixed odds market? Another one that's come through. So is Monmouth Bet still on track to launch mid-2023?
Yeah, we expect the digital platform to launch in the early part of this year. Again, I think I've seen a question come through there in relation to Caymanas as well. So the focus for me moving forward in my new role is to get these products out into the market faster, and so to execute on these opportunities in a more timely fashion. And we'll have our own little team that is there to be efficient and a lot more agile. And so the expectation is that we'll be launching Monmouth Bets before they before they start the season in May, and then that'll be leveraged into Caymanas bets as well. That then creates obviously opportunities around, once you've got these products in the market, then we can leverage that into our other customers and other markets as well, which again will be a focus of mine moving forward.
Thanks, Todd. Just another one here. So when can we expect the rollout of a horse betting product from Bet for the tier 1 online operators in the US?
It comes down to obviously the challenges that we've had, around regulation, legislation, and obviously the content owners as well. I think the Monmouth Bets app in the market with more content than just Monmouth Bets at the moment. We've just been betting on New Jersey content within New Jersey on track. And so to be able to then open that up so that we can have an online mobile and web version where customers in New Jersey can bet on any content around the world, will open the eyes up to obviously the operators then to be able to offer a really compelling racing product.
Thank you for that. A few questions just on New York. So how confident are we that fixed odds is being approved in New York?
Look, New York's not approved. It's going through the legislative process, and which is similar to what we went through in New Jersey. The positives out of it are, Colorado's gone through that already and still working through getting to where it needs to be. New York obviously implementing legislative bill to get passed. It is gathering momentum over there. We're cheering for horse racing, fixed odds on horse racing and any horse racing in particular to obviously accelerate in the US market. We've got our flag in the ground over there. We believe that we're at the ground level. Horse racing, we believe will evolve and quite rapidly. And so, this is just another stepping stone of what needs to happen. So, it's a little bit to go in New York, but obviously the wheels are moving.
Got another one for you. So you noted the launch of Global Tote Hub. Which bookmakers are currently betting into this, and what pools are they betting into?
Yeah, so the Global Tote Hub is set up for our tote customers. We've got a number of customers around the world who are small, large, all shapes and sizes, but predominantly parimutuel betting. Global Tote is a parimutuel product. And so being able to distribute international content into other markets has been a challenge for racing bodies and rights holders for a number of years. We're uniquely positioned that we now have access to content, and we own our own tote, and we also have customers around the world that bet parimutuel. So it makes sense that we can join these together and create a network where the totes meet the content, and then it's a pipeline then for other people to bring in their content and other operators to jump on board. So while it's in its early stages, all the pieces of the puzzle are there. It's now live. We're doing some small transactions there. But the exciting thing for us over the next 6 to 12 months is being able to put those pieces together and introducing our customers into our content that we got.
Thank you, Todd. Another one that's come through for you. So what is the expecting betting turnover of fixed odds in Jamaica?
Look, we're seeing some really good traction there. We've only launched betting on Caymanas Park at Caymanas Park. So where the turnover on track has actually exceeded the parimutuel turnover, and ironically, it's actually increased parimutuel turnover as well. So it's created a lot of interest. So in a very early embryonic stage, what we are excited about is then providing the digital platform where, again, people in Jamaica, in the Caribbeans, can actually bet on all content in a regulated form of fixed odds from content around the world. So getting racing bodies and rights holders access to that market now in a regulated sense, in a digital, and access to those clients is what we're going to be focusing on.
Thank you, Todd. One for you, Jake. So how is the Caesars parimutuel system going with the rollout, And is this showing the accounts yet?
Yeah, the product is now live in Iowa and working really well. Obviously, Iowa only represents a small percentage of the Caesars global reach. What I can say is we're currently going through that licensing and approval process in Nevada, which is Caesars' largest market globally. So we're working actively with customer and regulator to get that completed. It is a process, but it's obviously something that is well worth the investment, given their reach in state. So we look forward to getting that done this year.
Thank you. There's one here for you, Matt. Excuse me, sorry. So could Matt please talk about whether Better has met its expectations and the opportunities for the platform created by Bet to be translated into other markets, including the US?
Look, I think that's a great question. Better has been a success on pretty much every metric you can look at. I think everybody who's been associated with that has been incredibly proud of the results, both from the team run by Andrew Ment, as well as from the support from the Betmakers team to achieve probably the best launch we've seen in Australian history. In terms of the technology and the platform, I think this is one of the huge opportunities for the company. One of the challenges for new emerging technology platforms in the sports betting business is to prove that you can handle a tier one operator. The issue there is sports betting is event driven. And so when you need the platform to operate is on the largest sports betting event days of the year. And that's difficult for operators to trust in a new platform until they've seen it actually proven. So it's a bit of a catch-22. Here, Betmakers has established a tier one operator in the Australian domestic market, and we can take those results and use those as part of our sales and marketing campaigns for tier one operators internationally. And I think that's a great opportunity for the business.
Matt, I'm going to stick with you. There's another one here for you. So where do you see the biggest opportunities for Betmakers over the next 2 years?
Look, I think we have articulated those in the press release as well as in the opening today. Opportunity one, we need to demonstrate that we have the ability to show the operating leverage in the business. We need to be able to show good, strong cash flow generated from operations and strong EBITDA margins that are commensurate with 100 million plus top line revenue business. The second is we have some amazing blue sky growth opportunities that Todd and the team will be focused on. Those are around fixed odds betting on racing in particular. That's not just US, but that's truly an international product set. The vast majority of wagering on racing around the world is on a pari-mutuel basis today. And we know through our experience in the Australian market that a fixed odds bet product type is incredibly attractive to the consumer base. And the second is around the global tote. Nobody is in the market with a product like we have, and it has the ability to scale that product like we can. So those are the three kind of key levers that I think if we execute well on those, we will deliver fantastic results for our shareholders, and that will be reflected in the performance of the business and the way the market views us.
Thank you, Matt. Nick, I'm going to direct this one to you. So at the AGM, the chairman seemed to suggest that Betmakers was looking at an acquisition. Is there anything on the horizon? And then secondly, is there a plan to pay a dividend?
There's no plans to pay a dividend at this stage, but obviously that goes towards, that's for board consideration at any point. While we're still in this growth phase, I don't believe that that's appropriate. Sorry, what was the first question, Jane? In terms of acquisition?
Yes.
I think Matt's already commented on that. I think we'll look at, we as the board and Matt and the team as executives will always look at opportunities that are accretive to our business. But at this point, we believe we have a platform and a foundation that can deliver revenue growth and profit growth without necessarily through acquisition.
Thank you, Nick. Anthony, we've got one here for you. So can you explain why only 1.4 mil was generated from Better in the previous quarter, and how will we be paid from Better going forward?
Yeah, sure. The Better contract is structured as a net gaming revenue share for ourselves. And with that, there's a cap and a floor effectively in the range of revenue we can generate from that each year. At the moment, we're sitting at the floor, which is 7.5 million per annum. The 1.4 is just reflecting 2 months worth of receipts from those guys. And that's just simply a timing difference between invoicing and cash receipts during the quarter.
Thank you, Anthony. Jake, this one's for you. So costs this quarter and year to date are over 70% of receipts. This is not sustainable. What is the board and executives going to do to address this?
Sorry, I thought you said costs at the start of that. Yep.
I did, yes, sorry.
Yep. Yeah. So throughout the half just completed, and more specifically the quarter, we obviously had to make significant investment. And that investment was deemed to be necessary for us to take the next step. When I say take the next step, that is, to deal with tier 1 customers on a global basis, and things like the development of the new technology, the ISO certification. And for us, that next step required the investment, but we think it puts us in a strong position now to grow forward and a better platform to move from. Certainly as a business and management executive, we're well aware that costs and spending, particularly in the current macro environment, there's a heightened focus. And our next 6 months will see a dial back in that area and increased oversight and focus as we start to get to a more mature state with those products and investment work that we put in last year. So that's a common theme across the board from management, and obviously in Matt's appointment, that's something that he'll be overseeing as well with his insights into the capital markets.
Thank you, Jake. Matt, I might direct this one to you. So there's been little to no insider buying. Can you speak to that, please?
Having not been an insider for some time, it's probably not appropriate for me to chat about that at this point. Look, suffice to say, I think that the stock looks like fair value to me. I've certainly have been a net buyer over the last 6 months. I think we should stay focused on what we can control as executives, which is really driving the operating leverage in the business and focusing on the key growth opportunities. As in how we end up acquiring more stock, I think we will obviously make the right kind of public statements as and when that happens.
Thank you, Matt. Todd, perhaps one for you. So where is Todd's incentives to grow the business? He's foregone a significant amount of performance shares, and so is he still committed to the business?
Yeah, I certainly am committed to the business. So I've got a number of shares that I've acquired along the way. So it's it's obviously a company that I've got a lot of passion about. I want to see it succeed. I think we've got the right structure in place now, to help us achieve that. I'm certainly committed to the business. I'm excited about working with Jake and Matt into the future, and I think we'll do some good things.
Wonderful. Well, thank you, gentlemen. We've actually run out of time now. Matt, I might hand over to you just to do any closing statements.
Thanks, Jane. Look, thanks everyone for your time today. Appreciate the business has grown rapidly over the last couple of years. It's been quite the journey. And we find people get enthusiastic about the business and then they get somewhat depressed about the business, and that's quite a cycle. Where we're at today is in rude health. 100 million plus in revenue, 0 debt, tens of millions of dollars of cash on the balance sheet in a time where the value of cash is significantly higher than it has been over the last couple of years. We have an excellent management team, and we have some phenomenal assets inside the business, both domestically in Australia as well as internationally. So I think the business is incredibly well positioned. We have exactly the right setup you'd want for a business that is set for significant growth. I think we have a very clear path in front of us to deliver on that. And we look forward to reporting back to you as shareholders over the next couple of years, certainly over quarter by quarter as we execute on this promise. So with that, I'd like to thank everyone for the time.
Yes, and thank you everyone for joining us today. Should we have missed any questions, please feel free to reach out via the contact details on the bottom of our ASX releases. But thank you again.